Good morning and good afternoon, wherever you are. How are you all doing? Afternoon, Andre. Afternoon, Crom, Steve, Baggy, Alex. How are we all doing? All good? Just a quick start off with a recap of this morning so far. Afternoon, Stefan. Did anybody get on that DAX trade this morning, by the way, that I called out in the live room? That one. Worked out nice, didn't it? Look at that for an entry. Don't get much better than that, does it? I'm out. I was going to come all the way down here, but I've bottled it. Too much money on the table. I'm out of that. Worked very well though, didn't it? Banked 1,600 quid this morning. Quite nice. So, quick recap of this morning. Afternoon, Fletch, Brian. So this is the H1 hedging strategy. Banked 1.36 so far today. 19% on the month, 2.26 in drawdown. Banked 3% on that yesterday. H4 M5 mean reversion banked 1.8 today, 1.64 yesterday, 12.4 up on the month, sitting in open profit. H1 hedging M5, that's banked 0.75 so far today, 1.24 yesterday, 15.7 for the month on pretty much break even. Still haven't managed to bank that New Zealand dollar yen. That's been floating all day. And ADR reversals banked 0.7 this morning, 0.9 yesterday, 3.94 on the month, flat-ish, 0.5%. Still can't get out a New Zealand dollar US dollar. So all good, all banking, which is nice. News this afternoon, we haven't got any. Well, we had Empire State Manufacturing at 1:30. We got a fair bit of movement off of that. So we had a little bit of a rally on the yen. If you look at all the yen pairs, that came down fairly hard there. So that's your news, basically. So that was 1:30, the Empire State Manufacturing. We slammed down for 15 minutes, and it's basically just done a V-shaped recovery and undone the entire move. So, yeah, that's all that happened. We got a big, strong move off of the yen off of the back of it, but nothing else. US dollar didn't really bat an eyelid too much. We had a little bit of a whipsaw, but most of that movement went on the yen for some reason, and it's come back. So, so that's all the news for the day. That's it. We're flat for news. So tomorrow morning, we've got the monetary policy meeting minutes for the Australian dollar. Monetary policy meeting minutes for the Australian dollar. 7 a.m. before I come on tomorrow morning, we've got the claimant counts for the pound. So we'll get some movement potentially off the pound. Doesn't tend to do a great deal, that one. But tomorrow's main movement is going to be at 1:30. We've got the CPI for Canada. So the inflation figures for Canada. And at the same time, we get the retail sales released for the US dollar. So that's the main news tomorrow, 1:30 tomorrow afternoon. So yeah, that's it, news-wise. And what's happened so far today. The DAX this morning, opening range breakout was a bit of a dodgy start this morning. I took that rejection of the previous day's high. So that's the trade I took this morning, was the previous day's high reversal there off that high. We had this area here we looked at this morning. I can't see that bit, but there's another high. This is last week's high. So we were sitting up at the highs basically. So took the short of a gap fill, which worked beautifully. We've got this gap here. I'm always a bit dubious when you got that. And when we touch the high of that drop, basically. So when you get a gap fill, I'm kind of classing that as done. But we've got that big old gap from previous on the DAX to the downside, which we're still looking at a fill on potentially, which is down here. That one there. So we still got that. So that was the play. The account I've just taken that trade on this morning is a valuation account with Fidelcrest. So I'm not going to hold it. I'm looking to bank. I'm up to 7% on it now. So I've only got 3% to go. So I just I'm banking regularly. Right, so that's the DAX. We've got 2 minutes to the open. We'll have a quick look at the Dow, ready for the opening range breakout strategy. So we've had quite a lot of movement this morning on the Dow. We've had a big push up, say big, half an ADR, and a push back down again. So we've had a lot of pre-market movement, which might stifle the open, but we'll see what happens. As you can see on the Dow, we're sort of sideways at the minute. We did break that low last week. So basically we went into kind of an ascending wedge pattern. So that was a rejection of price discovery to the upside. Then we broke the downside. So the market structure for me is that's a peak formation, high, low, lower, high, looking for a lower low to go in this week. We've got this area down here that's going to potentially act as support resistance, which is 200 ADR from where we are at the moment. So basically looking for last week's low to be challenged. Potentially today, because that's there's ADR, there's last week's low. So last week's low is 125 ADR. So lots of good downside potential for the Dow. We'll see where that goes. But at the moment, we're on a big drop. So it's dropping quite hard at the minute, as all indices are. News this morning, non-forecast news. We had obviously the Fed manufacturing. We had a bit of Canadian news. There is some risk of recession. We've kind of known this forever, so this is not news. Rate cuts aren't part of the baseline, which again, all the Fed have been saying they're not looking to cut rates this year. So that was it. No other news this morning. So there we go. All caught up. Whoa, what the? I hate it when I do that. Accidentally press the mouse button down and it goes into auto scroll mode. Right, so we watched the Dow. We'll have a look at the NASDAQ as well for the open and see where we go. We've got 5 seconds. And we're off. So there's your pre-market 15. Your pre-market 15 on the NASDAQ is there. Whoops, was there. You're now low. You're short on the NASDAQ. So the opening range breakout on the pre-market is short on the NASDAQ. Dow, we haven't gone anywhere yet. Still within range. Catch up on the chat while I'm waiting for the market to do something. Afternoon, Virginia. No, none care. I am sorry I couldn't send the stuff. I was in hospital this weekend. That's not good. Hope you're feeling better. Hope it wasn't an alcohol-related injury. No sympathy for that. Been there, done that. Got told off by the nurses. Morning to all the ninjas and mofos. Morning, AGB. Brian, trading Fidelcrest today. Only FX. They don't give me indices for some reason. Really? You had indices on the evaluation, though, didn't you? I've got indices. I'm trading the DAX with it. Afternoon, John. 15-minute pre-market ORB or 5-minute pre-market ORB, depending on which one you're using. You are short on the Dow. So downside on the Dow. We've got a long way. So yesterday's low, or Friday's low rather, is a long way away. 3/4 of an ADR away. So big old drop down to there today. Lots of downside potential. All rejecting on the NASDAQ. Still short though if you're on the pre-market. Afternoon, Stevie. No sympathy for the devil. No. All FX. That's weird. So why are they not letting you? Maybe you want to get in. Well, it depends. If you don't want to trade indices, then don't bother. But if you do want to trade indices, I get in touch with Fidelcrest and say, "Where's my indices gone?" Just trying to think on my second stage account, I definitely had indices. I don't know why they would take it away. They're gonna. What happens if you pass your evaluation scalping the indices, and then all of a sudden you get funded and you got no indices? That sounds like a mistake to me. I would get in touch. Opening range, You are 1-to-1. Almost, not quite. There you go. There's 1.5R. So for those of you who don't know the opening range breakout strategy, if you go and follow the links on the website, on the links at the bottom to the website, there's a page on the website which covers the opening range breakout EA. And the strategy is all explained in detail there. What the opening range breakout strategy is, but it's basically the open of the indices. You get this big old move. So the pre-market, you're looking for a quick scalp play, usually 1.5R, something like that, or hold it, depending on how brave you are. But when you get the opening range break on the 5-minute or the 15-minute, we're looking for basically the move of the day to get underway, basically. So that's a nice risk reward on that one. Leave that on there for the minute. Afternoon, Derp. I'm thinking US regulations. I'll send a message and find out. They can't not let you trade indices. If they allow you to do indices on your evaluation, they can't say you can't trade indices on the account. You've got to be able to trade them. There's a 2R return on the pre-market. Gutted. But the DAX is doing the same thing, isn't it? Oh no, that's all right. I don't feel bad about getting out my DAX trade now. NASDAQ's really struggling. So that's your 5-minute opening range candle about to go in. We've got 25 seconds left on this. We're just retesting new monthly level, the old monthly level on the Dow. We've gone through this a couple of times, so it's not really that valid anymore. But last week's low, 125 ADR is the target. There's your 5-minute opening range. So if you are trading the 5-minute ORB, you've just got triggered in short on that after that massive down candle. NASDAQ's stuck. So there's your 5-minute opening range on the NASDAQ. So wait for a break of that in either direction to go with the momentum at the open. Right, there's your opening range in. So we'll monitor that. If you took the pre-market, is Outro in here? Can't see him yet. Outro trades the 5-minute pre-market. 5-minute pre-market gave you a 4R. Mind you, the 15-minute pre-market gave you a 3.5R. So what's half an R? Depends how much money you got on the table, I suppose, isn't it? Right. Okay, so that's the opening range pre-market done. And there's your 5-minute opening range. That's going to be a tough one to trade today, that 5-minute. We've got roughly half an ADR from where we are down there, and this whole area here is basically acting as support. So you got yesterday's low or Friday's low, and you got 2 weekly lows there as well. So this is a really strong support area we're approaching. So they're obviously making a run for that by the looks of things. Right, let's look at ADRs. So far today, obviously we looked at ADRs this morning in the London session. There's no monthly ranges hit yet this month. We're halfway into the month. We've got nothing that's got extended beyond its monthly ranges. Obviously, it's Monday, so there's nothing beyond its weekly ranges because it's the first day of the week. The only thing we've had that has hit ADR today has been the pound yen. So pound yen, basically, we got a nice reaction off of the ADR. So I took a short on this on the Fidelcrest account. It's just pulled back. So that's your ADR high, this green line here. We got the reversal alert there. So that was your entry off of ADR. We're looking for roughly a third to half an ADR in return, which is somewhere around about 75 is half an ADR. So half an ADR is kind of out these lows. So at the moment, you're still in this if you're in it. Potentially, we're doing a retest now. So this could turn into a nice M pattern reversal. But if you look at it on higher time frames at the moment, the pound yen, we've been stuck. This is obviously last week's range, which is last week's high low. Previous week's high low. Last week's high low is here, which is also the monthly, which is that previous monthly. So we're kind of stuck within this range at the moment, and we are bang in the middle. So this could go either way. You've got this big propulsion gap target to the downside. You've got these two big propulsion gap targets to the upside. So this could really go either way at the moment. Pound is expected to be a little bit strong. We are extended on the hourly though. So this is an hourly M5 reversal alert as well. So you're extended on the RSI on the hourly. M5 reversal alert is in. So potentially looking for pullback on that move there. But we'll see. That's the only thing though today. That's the only ADR we've got is pound yen. There's nothing else getting anywhere close, I don't think. New Zealand dollar yen's not far away. So it's all the yens basically off the back of that move that we had off the news. Aussie dollar yen got very close to hitting as well. That's ADR where we got to. So this could push up. We could get some more ADR hits on the yen pairs today, but that's it. Nothing else to look at. RSIs. So we've only got 3 RSIs, two RSIs to look at as well today. The US dollar yen and the Aussie dollar New Zealand. Again, we looked at these this morning. So the US dollar yen is extended on the 4-hour. We're just up at the 70 level at the moment on this one. And again, we're kind of sideways on US dollar yen at the minute. No real strength, no real weakness in either direction. So the fact that we're extended above the RSI up at this propulsion, I would say up to there, 100, 125 ADR today would be a beautiful short because you've got last week's high and last month's high coming up as potential resistance. If this is a bounce off of this level here, we could well just put in a new leg down towards these lows. So not particularly exciting. The market reversal alert CA will be getting in on this one on the US dollar yen on a short, I'd imagine, if it's not already. Yeah, already in. So US dollar yen is already short on the 4-hour mean reversion. So there's the entry. M5 reversal alert was there this morning. Beautiful M pattern. That's your entry. And obviously we've had to push down and push up. Don't know where it's going. It can't make its mind up at the moment. So that's a nice short on the 4-hour. The only other thing we got extended on the RSI dashboard is the Aussie dollar New Zealand dollar, which is extended on the 4-hour and the hourly. So this is a bit more of a downtrend. Again, we looked at this one this morning. The 4-hour RSI extension to the upside in the downtrend. So potentially good spot to start looking for shorts. This one's a bit tricky. So we are just about extended, but only just. If you look at the hourly, we had the extension on Friday, and we've now got divergence. So there's your divergence on the RSI. So the RSI is coming down, price is pushing up. So that's bearish divergence. So we have got this propulsion gap, these two propulsion gaps here, this one and this one. So once we've completed those, I reckon we'll probably get a push back down into this area, but it could just come straight down into there. Don't know. Extended though, so there's your entry. Your entry was on Friday, as you can see. I've got one. This red line is my short. I've got one on already, and that was at a resistance level as well. So that was a lovely little short, but it's pushed up and put another leg in. So that's it. So that's all you've got on your RSIs. Aussie dollar, New Zealand dollar, hourly and 4-hourly, but only just extended on the 70-30 and only just extended on the 70-30 on the hourly as well. So nothing exciting. Nice 5-minute opening range on the NASDAQ. So the ORB on the NAS is this one here. So it's a short, but pulling back up at the moment. always tricky. When you've had a big, strong move just before the open, it's really difficult. We quite often get these quite choppy opens. This has been an absolute beauty, the pre-market on the Dow today, but it's not always the same. But yeah, really nice break to the downside. On the Dow, what about pound US dollar? Is nothing with it. So pound US dollar. Oh, buy. Yeah, so sorry, I was just looking at it. So it was in on this on Friday. This was an H1 M5 mean reversion trade on Friday. In, out, done. So just sitting in the middle. Should have been on that on Friday. And you were out. Well, you don't have to be out. You could still be in it. This propulsion gap is likely to get filled, and yesterday's high is likely to be tested. So it's probably got a little bit more upside on it, but nothing exciting. In on you, Jay Brian. Good. So that's it on the RSIs. There's not a lot else to look at. It's basically the market's pretty flat at the moment. If you whiz through all the pairs and look at where we are at the minute, you can see there's a lot of, for the last couple of weeks, there's a lot of sideways at the minute with a lot of stuff. So anything that is getting extended is kind of getting in and out fairly quick at the moment. Nothing's squeezing, nothing's pushing. We're all kind of sitting around. So most of the trades, as you can see by the P&L on all the strategies this month, they're all playing out. Everything's just banking at the moment and not a lot of drawdown anywhere because the market is fairly sideways. A little bit like March at the moment. So just get in on the RSI extensions at the minute and wait for all the trades to play out. But it's either, it seems to me at the moment, we're either sitting in like this one, Aussie Swiss is a perfect example. We're either getting in and we're sitting in things for days before it gets out, or we're in and out literally within 24 hours. So everything's really aggressive or really slow. There's no kind of nice trending stuff at the minute. So yeah, nothing much else to look at. So let me know if there's another pair you want to look at or anything else you want to look at, discuss, talk about. But at the moment, is as you can see here, Euro odd. There's just no setups anywhere at the minute. So just banking stuff. Euro US dollar is also in going up too, mostly slow. Euro US dollar. Not quite sure what that means, but yep. So in Euro US dollar long. We'll be out of that soon, I reckon. So that propulsion gap there and previous day's low is half an ADR, just over half an ADR. So if we get up into that propulsion gap today, I'll be out of that. Yeah. It's all a bit rubbish. Afternoon, Zico. Pound New Zealand from Friday, H4 short. Yeah, still in that. That's an H1 RSI extension as well, that's short. So this red line here is my short. That was an H1 RSI extension. Yeah. Yeah, nice M pattern potentially going in back down into here, but we've got these targets upside as well to hit as well. So that one's kind of done. Got that one there. So that's the main target, ADR today. So if we get a push up to ADR today, that's kind of perfect for a short back down into this area. But obviously, you know, look at this one here. Similar size propulsion gaps. Yeah, this one here and this one here. They, you know, a week, 2 weeks to undo. So if we push up into there, we could sit around here for a day or two, have a little push up, down, and then come back down to here. Just waiting for some movement, really. Pound, obviously, if you look at this one, is a very nice big uptrend. So this is the biggest break we've had to the downside on the pound for quite a while. So this is potentially a flag break. If you look at it on the 4 hour. Very nice potential flag break to the upside. So this could push up and put in a new leg up there somewhere. As long as it does it like that, I don't care. But equally, we're not seeing the strength in the pound that we were expecting either. So the pound and the euro both increase on interest rates. Market wasn't happy with them at all. So we'll see. Could go either way. It's extended though, 4 hour, and extended on the hourly. So shorts. Oil. Look at oil. So oil's pushing. We looked at this morning as a long. Is going not far. So that propulsion gap target got hit. Got that downside as well. So this is basically all the trend line sellers jumping on board, putting their stops there. Don't know. Oil, very difficult. Very difficult. It should be starting a rally, but it's not at the minute. So we'll wait and see. There's definitely more targets to the upside than there is to the downside, and we've got that $95 a barrel target to aim for that all the big boys are calling. So wait for longs, really. Dow coming down very nice if you're in that. So we just started a second leg out that propulsion gap. Looking to target last week's low and previous day's low. And yesterday's low. So you're basically these levels here. This is yesterday's low and last week's low. This dotted line is the previous day's low. So there's your target. High, low, lower high, lower low, lower high, lower low, lower high. Carry on until it says stop. US dollar CAD. What's US dollar CAD with Euro CAD? What? Doesn't make sense. US dollar CAD, I've got shorts on at the minute off the RSI extension from there. Whoops, not there, sorry, there. 2 entries short. Basically just waiting for some movement to the downside. So looking to target these propulsion gaps out of this one. And EuroCAD, very much the opposite. Longs was out on Thursday or Friday last week. Friday out of the longs. Hasn't gone anywhere though, but big old targets to the upside. I'll be looking to buy that rather than sell it. But it's not right at the minute. It's not sitting anywhere. The trades were all starting from here, mean reverting back up into this area. And obviously it's a long from a trend perspective as well. So it's a 72 bounce. Quarterly bounce. Pound CAD, Mr. DT. Sideways mess. So this is what? 1, 2, 3, 4, 5, day 6. Look at this range. Look, this black line here and this black line here is your weekly high and your weekly low. That is your average daily range high and average daily range low. So last week, in the last 6 days, the price action hasn't managed to push outside of its normal average daily range. So in an entire week, we didn't even get to its average daily range. It's absolutely dead in the water. So if you are a mean reverter, you'll be shorting it there and longing it there. If you're a breakout trader, you'll be longing it there and shorting it there. I'm not getting interested. I'm not interested in any of it. Targets to the upside. Targets to the downside. Flip a coin. You're going to get it right or wrong. Not going anywhere, is it? It's after this massive move, it's exhausted and tired and doesn't know what to do, does it? It's just there's just no interest in the pound CAD at the minute. Dow's pulling off the lows. So there's your 15-minute opening range. Big propulsion gap target. So tired. We expect to push up into there, and then we'll see if we can get another leg down. That was your play today, the pre-market. Pre-markets are so good at the moment. Absolutely killing it, pre-market. If news comes around with EuroCAD, I don't know what you mean, none care. I don't understand what you mean. With EuroCAD, if news comes around, what if news comes around? Brian, combine gold and oil as a pair. Call it Goyle. Did you? Yeah. I'm pretty sure you can chart that. Move volume. None care. I really don't know what you're saying. I don't know if it's a language barrier thing, but I don't understand what you mean. With EuroCAD, if news comes around, move volume. I don't know what you mean. Are you saying if there's news on the euro or the CAD, it will move? Yes, it will. That's what moves the market, news. You're kind of just stating the obvious. More volume. If news comes around, there'll be more volume, yeah. But if you look at the news this week. Yeah, tomorrow is CAD. That's when we're going to get the movement on the Canadian dollar. There is no euro news this week. We've got Macklem speaking and retail sales on Friday for Canadian, but there's no euro news this week. Lagarde is speaking twice this week, but Lagarde is just going to come out and say the same as usual, that they're going to increase interest rates by at least another 0.5%, which we already know. So the market's probably not going to move much off of anything this week with the euro. And the Canadian dollar is waiting for CPI. So hence being sideways for the week. Any news about my EA testing? That's a very broad question, Derp. I have many EAs that I am testing. So I haven't got much further on anything yet. I'm focusing at the moment on a new position trading EA, simplifying it. I'm testing. I'm just doing lots of testing at the minute. I haven't got any further with anything, really. Unfortunately, I am working on stuff, though. We've just broken the lows on Dow. So Dow is sitting in this propulsion gap at the moment. Target 1, target 2. So watch for a bounce here. We're just about to put a big propulsion gap in as well. 2 propulsion gaps potentially on the Dow. Oops. So this is going to turn into a propulsion gap. When this hourly candle closes in 3 minutes, you're going to get a big propulsion gap formed there. And depending on what happens off of this candle, obviously we've got that massive candle here now. So if we get a little push up into there and push back down, you're going to have a second propulsion gap. So there's potential to leave a big old upside target on the Dow if it does run down to these lows in the next hour. So that would be a very nice looking potential long opportunity if we get a break, a bounce down at these lows. So I'll be watching these lows, see if we get a move off those lows today. Stuck. At the lows, though, we can't make any new progress at the minute. I think of your inverse entry on ORB. Oh, that. Oh God, no, that was dead in the water before it started. That was basically yeah. So that was this opening range breakout reverse. So this is the ORB EA. But what it does is it trades the opposite way. So somebody said they'd done some testing and it was a fantastic strategy if you took the opposite of what the opening range breakout does. Yeah. So it's the same. This is not an uncommon thing, right? So, and it's something that people get wrong all the time, and it's a very easy thing to get wrong. But there's quite a few videos out there that say go and find a strategy that fails and reverse it. If you do the opposite, so let's say, for example, you get a strategy that produces an equity curve like that, right? In theory, what you would think is if you did the opposite of that, the equity curve would go like that. That isn't what happens. So what this guy basically did was he did some back testing to say that instead of using the opening range breakout as a breakout tool, use it as a mean reversion tool and revert to the mean, which, if you think about it, because it's a breakout which fails sometimes, those ones that fail should, in theory, work, shouldn't they? What people don't take into account when they're looking at this is that the reason a P&L curve goes like that is because you have, let's say we took a breakout there, a fixed stop loss and profit target somewhere up there, right? So that's roughly a 1-to-1 stop loss reward. In theory, if you had a 1-to-1 like that and the profit curve went down, in theory, that probably would work if you took the opposite. Yeah. However, what everybody has is a positive risk reward ratio. So what actually happens is if you try and do the opposite, i.e. sell there, your stop loss is not up there, 1 away and 2 away down there or something. So basically, if you've got something that is mean reverting like that and you're selling the highs and playing it down to the lows and that's your exit, that will work because it's equidistant. However, if you've got any kind of ratio that is long 2R and your risk is 1R, for example, if you reverse it, that bit there is bigger than that bit there. So you have a negative risk reward ratio. So you can't just flip a failed strategy on its head and it suddenly becomes profitable. It doesn't work that way. I'm not explaining the maths very well on this, but trust me, it doesn't work. So we did this thing where we got the opening range breakout, and instead of buying, we put a buy limit there and a sell limit there on the hourly range, the first hourly range, and we try and mean revert it into the middle. That one didn't take a trade. That one didn't take a trade. There we go. So we went short. So there's your hourly range. We hit the hourly range, shorted it. That's our target back in the middle there. Hit. Perfect. One trade, one win. Looks good. But basically, because it's a mean reversion strategy, you've got to have a bigger risk reward ratio than 1-to-1. So it just doesn't stand up. And long term, it doesn't work. Look at that opening range breakout you missed. 7R, 8R, but instead you're going for the 1R. Just doesn't work. So yeah, that didn't work. It fails. It has a little good, it has good runs. You know, it's banked $2,000, but when you run it for a long time, so look at this, a beautiful profit curve forming, as you would expect from something with a 1-to-1 risk reward ratio that's playing intraday ranges. There's a high probability. We know that the market spends 58% of its time intraday within its average daily range. So there's a high probability if you're trading within the average daily range, you're going to get targets hit 60% of the time, aren't you? However, the days you don't and the runs you don't completely wipes everything out because you've got a an equal risk reward ratio instead of a positive. So I tested it. I put it through the back tester with lots and lots of different permutations for about Admittedly, I only tested it for about 3 or 4 hours, but I couldn't get anywhere near getting anything profitable. So scrapped it. Inverse ORB doesn't work. The whole edge, and this is what I explained to the person that was talking to me about it, was the whole edge of the opening range breakout EA and the whole edge of the strategy is that you do not know which way price is going to go, and you're going with momentum. Yeah, it's a momentum breakout strategy. You've no idea if it's going long or short. Nobody has. So what you do is you just get on whichever way the momentum takes you. And as we saw there, you get a 4-hour return. That's the edge. Some days you're going to get whipsawed. You're not going to make money. But the days you do make money, the breakouts, you can make a lot of money. It's a trend breakout strategy. So yeah, that didn't work. Same, you can use a copier EA, but copy reverse. Yeah, exactly. And that's what I tried, basically. There's EA, there's copy trading EAs out there. And that's how I did all that research. I did all this trying to reverse a losing strategy probably about 10 years ago. And I've bought EAs and got free EAs that reverse strategies. They don't work. Because the whole reason your equity curve drops is because your risk is that much, your reward is that much. And basically what's happening is it's not quite getting to your reward and it's stopping you out. So flipping it the other way doesn't mean you're going to have you have to adjust the stop that way and the profit that way. You get the same equity curve. It's like the RSI. People have said to me, if you put anything out on YouTube or anything out anywhere, you get haters. It's just what happens on social media, isn't it? So, oh, you idiot. Why are you selling when it gets up there? That's a breakout. Yeah, all right. Sometimes you'll win. I go into squeezes when you go into profit. It's the same as anything, isn't it? If you try and take a bounce off of a moving average, sometimes it works, sometimes it doesn't. Flipping it the other way, so when you take it the opposite direction, doesn't make it profitable. Markets are 50-50 thing. So, you can't win. But it didn't work, unfortunately. So it had good. There's lots of other ways I tested it as well. I tested the 1.5 hour. So not Larry Williams. Oh my God, I've forgotten his name. Candlestick Man. What's his name? Everyone's going to give me different names now. Candlestick Guru. Al Brooks. So Al Brooks is 1.5 hour mean reversion theory, where after 1.5 hours you have put in the high and the low, or the low of the day within around about an 80-90% accuracy is true. You just don't know which it is, obviously. So I tried to test the 1.5 hour range as a mean reversion using that as well. Again, didn't work. So anyway, I have other things like propulsion gap, which is looking a lot more promising. Has anybody got anything else they want to cover from course material or anything, or any other instruments they want to look at? Because there's no analysis to do today because nothing's ready to go, nothing's set up. There's not much on the fundamentals. We haven't looked at the sentiment, have we, for a couple of days? So sentiment plays, I don't know if anybody's using this, but sentiment plays have all been working out fairly nicely at the moment. I did a quick look through these this morning, and a lot of these have been working very, very well. Counter sentiment stuff. But could you explain a bit more about pre-market? So the pre-market on the opening range breakout is this here that you can see, these green lines are the pre-market. So your market opens at 2:30, which is that candle. So the pre-market is the period of time before the market opens. Yeah. So with the opening range breakout, there's some set files out there on the blog post, basically. There you go. So that's the 15-minute pre-market. Return on drawdown is 3.42. So this 15-minute pre-market set is kind of what we just looked at on the Dow here. So this green line here, OR1 and OR2, is the 3 candles, 5-minute candles before the open. Yeah. So what you do is you basically bracket that 15 minutes before the open. That's your pre-market price action. And when the market opens, all we're doing is we're defining a range of price movement before the opening cash balance goes in. Yeah. So the opening cash balance is the aggressive. We're just broken out the lows now. Is the aggressive move at the open. So as soon as that bell goes, market's open for orders. There's a massive flurry of orders goes through the market where the commercial players are dumping all the orders they've got to get executed before the speculative moves start. So they're just trying to get orders off their books, basically. So you get this huge move. And that candle is purely made up of, are there more people want to sell stocks in this index today or not? You've no idea. No one's got any idea. These guys that are executing these orders have got no idea, and they don't care because they've got a pension fund that said, sell tech sector. Okay, how much? 25 million. Right, dump all our tech stocks. They dump an order for 25 million. If there's someone at Barclays has got orders to buy 75 million's worth of tech stocks, the candle's going up. Otherwise, it's going down. Totally random. So the whole premise of it is it plays a random move, and the size of the random move determines how much money you make. So if you take the pre-market 15, you're either going to get one of 2 things happening. That, which is a beautiful 4-hour return today, or you're going to get entered and stopped out, break the other way and fly that way and make money, or you're going to get entered, stopped out, entered, stopped out, and lose 2 trades. Those are the outcomes. And that is it. Basically, when the opening cash balance goes in, there is such a large volume of orders coming through. A lot of the time you get a big candle. And the normal opening range breakout strategy is to trade the breakout of that initial opening range. So the idea being that the first 10 to 15 minutes, which is this blue line here and this pink line here. So that's your 15-minute opening range. That candle, and that candle is your 15-minute. So that is when the opening cash balance is determined to have been executed. And from that moment on, the speculative players who are trying to make money out the market take control. And whichever way they move it is typically where you will trend for the day. If you're going to trend. If you're going into a rotation day, you're never going to make any money anyway, unless you've been reverting. But you won't know you mean reverting until you've seen the rotation day form. By that time, it's too late. Then you get a breakout and you get killed. So the whole premise of the strategy, the pre-market breakout, is that you get in and you just hold on tight. And there's a guy in here, Outro. I don't think he's in it today. I haven't seen him. He's trading the 5-minute. So he's basically taking that 5-minute candle. Literally, whatever price action has done before the market opens, he's in off that candle. So his stop loss is there. His entry is there. So if you look at this today, your entry is just offset from the low of that candle, and your stop loss is just above, usually, the high of that candle. So it'd be somewhere like that. Ish. So entered short on the break of that, and then you got a 4R on that 1 5-minute candle. But target is 1.5 hour minimum. Because if you think about it, let's say, for example, we got a break to the upside, which failed, and you stopped out, you've lost 1 hour. If it then breaks down and makes 1.5 hour to the downside, you are positive 0.5 hour. 0.5 hour is whatever, $1,000, $5,000, $25,000, whatever you want it to be. But at the end of the day, if you come out with a positive 0.5 R, you come out with a positive 0.5 R. So if you risk 1% on a trade and you get a 0.5 R off of 2 trades, you've got a 0.5% return. 0.5% is 10% a month on a 100K account. That is $10,000. Job done. So that's the pre-market. You can take whatever you want on the pre-market. So if you look at the pre-market DAX today, so that's the green lines here. So this is your DAX pre-market today. Was there, look. So that's the 5, 10, 15 before the open. So that is your pre-market. It's slammed to the upside, up to there. Tick, 1.5 hour return. Yeah. And then you could have taken the 5-minute breakout to the downside, which was here, but you got this horrible, horrible candle here. Look at the wick on that candle. So your breakout to the downside would have probably, I don't know what the price action was there. I'd imagine, well, because it's a negative candle, I'd imagine the price action went like that and then down. So you probably would have been in, stopped out, and then down. So again, you don't know how it's going to play out. But ideally, you take the first one. If the first one works, you stop. Then if you if the first one fails and it breaks to the opposite side, you take the second one. But I wouldn't take more than 2 pre-market entries. So you can set it all up to do that. So you can, in the inputs, you can say take the 5-minute opening range break. So you would set it up. So this is trading the 15-minute. So it takes the 9:45 to 10 range, which is 7:45 to 8 a.m. UK. And it trades that. So you would set it up to take opening range breakout 1, which would be a pending order at the high and the low of that. And then you would set continuous mode to false. So it only places 1 trade and that's it, and 2 trades. And then if you get 1.5 hour on your first one, you can set it up so that it will close out all positions when you get to that profit amount, and then it will cancel the pending order on the short. Do whatever you like with it. I mean, it's such a versatile EA. You can literally trade any range, any type of breakout you want with it, but it's designed for the open. There you go. DAX doing very nice. DAX is going to the downside as well a little bit, so it's being dragged along with the US. The downside shouldn't have got out. Never mind. Money is money. Gold. Europe. We've already done gold, haven't we? Have I not done gold today? I can't remember. I lose track. If we haven't done gold, we'll do gold as well. So, as I said this morning, we're in exactly the same position. Hasn't gone anywhere. We're sideways. We're flat. 1, 2, 3, 4, 5. Day 6. This looks exactly like that pound pair we looked at. 6 days sideways. Not going anywhere, is it? No idea on gold. A minute. Just a sideways mess. So if you're going to trade it intraday, I mean, obviously there's not been an entry on gold. The last H1M5 mean reversion entry was here on gold, which was beauty. It worked out in 24 hours. You had one there as well off that propulsion, which worked out. You had one there, which worked out. You had one there, which worked out. You had one there. Anybody getting like a deja vu here using RSI as a mean reversion tool? 100% strike rate on the screen right there. But yeah, don't know. I know you're only joking, but I don't know. Virginia, can you go over the candle structure that make up the propulsion gap? Is it a 3-candle structure before the big candle move? So propulsion candles, there's lots of different ways to do propulsion candles. So the basic theory of them is a good one there. So the basic theory of them is it has to be 3 candles. Okay. Candle 1, candle 2, candle 3. Yeah. So you have to have candle 3 closed. If candle 3's low is higher than candle 1's high, i.e. this hasn't pushed down and touched that, you have a gap where we traded just in one direction and there was no opposite orders done. So we've got loads of buyers. Yeah, and to have an efficient market, you have a buyer and a seller, and a buyer and a seller, and a buyer and a seller, and a buyer and a seller. And the market does that. Yeah, and it ticks up as we have more buyers than sellers. When you get buyers, 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 and no sellers, it means that there's a load of buyers there that need to, or a load of sellers in here that have executed their orders but didn't manage to get out of their orders, which means they're left behind. So we come back and retest that area. That's what the whole theory behind it is. So that's the basics of it. The best propulsion gaps are ones where you have an accumulation before them, and the actual gap itself is bigger than the highest candle or the widest candle in whatever range before. So in the indicator, you have a setting for propulsion candle strength. So if you set that to 3, for example, what it means is this candle here has to be bigger than the previous 3 candles. So it gives you a move which is following an accumulation most of the time. Yeah. So we're looking for accumulation breaks. So these are breakout trades. And basically the theory is, obviously, after a breakout, you retest the breakout high or low. Yeah. So that gap that is formed after that accumulation is going to get retested. That's literally it. There's loads of theories. It's a really old theory and really old strategy. M.A. Perry, the guy that kind of came up with wide range bar theory, he kind of introduced the you have to have a candle bigger than this many candles part of it. But propulsion gap theory or propulsion theory or impulse theory has been around for decades. It's old as trading itself. When you see a load of people entering the market in one direction, there will be an exhaustion where the market will come back the other direction. It's literally just highlighting where those moves start. So it's just telling you where the banks started selling and where the banks started buying. And if the banks started buying there and they are targeting up here and the sellers push it back down, the banks will add more to their orders, which is why you get propulsion gap bounces. Yeah, that's why we have a propulsion, we test it, we bounce, we test it, we bounce, we test it, we bounce, because the sellers, the banks and institutions, are defending this level. Accumulation, or balance as they call it in the banks. You have a balance of area, an area of balance, an area of price discovery. If price discovery succeeds, let's get rid of this so you can see it's clearer. So you have an area of balance, or as we retail traders call it, an accumulation. You have a price discovery. Price discovery either fails immediately and becomes an A-shaped recovery back into balance, or price discovery succeeds, forms a new area of balance, and from that area of balance we'll then do price discovery either to the upside to see if it can trade here, or it will come and retest the previous area of balance. Propulsion gap. Propulsion gap theory. That's basically what it is. So all it's doing is highlighting levels of bank movement. But there's no right, again, it's like everything in trading. There is no right or wrong. There's no better setting than anything else. You can set the propulsion gaps to be stronger or weaker. If you go with something like a 10, you're going to get a hell of a lot less propulsion gaps on your chart. Look, but those propulsion gaps in theory are going to be a lot stronger. Look at that. Boing. Look at that for a railroad track. Yeah. Slamming down into this huge one here. Look at that. Balance. Price discovery. Succeeded. Off we go. People left orphaned. Retest. That one. Yeah. Retest. Retest. It's just how the market works. It's just highlighting exactly how the market works. Accumulation. Break. Retest. Bounce. Accumulation. Break. Retest. 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 So it's just telling you where the orders are accumulated that we're likely to head back to. So this is why I use it as a target indicator. That makes sense? Is that what you meant? Hopefully that's what you meant. Would the ORB work with high Kanashi candles, i.e. less wiki? No idea. No, I wouldn't think so, because it's a time, isn't it? You're operating on a time. The opening range breakout happens at 2:30 and 8 a.m. UK time. There is no high Kanashi candle, whatever. The price achieved within a time period is what we're trading. How you mark that with any type of candlestick is up to you. All we're doing is we are saying bracket a price range within a time period, and as soon as we exit that, get us in. Because if momentum is going to go flying for the day, a la Dow today, get us on board. That's it. So there's no candlestick. Your high Kanashi high and low is going to be the same. There's a high and a low point. So I don't think a candle is going to make any difference. You're trading the DAX only with the ORB. No, you can trade the ORB on any open, on any instrument. So the Dow here, DAX here. You can also trade the NASDAQ and the S&P 500. Same thing, same theory. Everything's the same. So there is your open on the Dow, on the S&P 500. So there's your pre-market 15 on the S&P. There's your break. There's your 5-minute opening range on the S&P. There's your break. NASDAQ, exactly the same. It said it was a mess today. So that was your pre-market 15, broke down to there, then came up into there, then broke out of there. So there's your 5-minute opening range breakout on the NASDAQ. So you were taken short, went up, stopped out, flipped long, taken short, stopped out, flipped short, down. So you've had 2 losing trades and you're in 1 winner at the moment. You see the difference, yeah? And this is, again, people say, what's the best thing to trade it on? Today, the Dow or the S&P. NASDAQ, you made a loss. DAX, you did okay. Dow, you killed it. Tomorrow, Dow will be awful. NASDAQ will be amazing and the DAX will be crap. It's random. This strategy really highlights how random this market is. You got 4 indices I've just shown you there. If you took exactly the same trade with the same strategy on the instruments that move in the same way, some of them will lose, some of them will win. It's all about risk reward. That's it. And you can't determine what's going to move, which is why, we said about this morning in the live room, somebody was saying about in the Telegram, they found an edge with the opening range breakout strategy that could improve it, in their opinion, by using a moving average. And my argument is there is no way of predicting the future. Yeah, we know that. You can't predict the future. If we could, we would. You can't. So you can say that on the NASDAQ, it is in an uptrend. So does that mean you should have taken an opening range breakout long today on the NASDAQ? Whoops, you're dead. Nothing to do with it. What happened yesterday is totally irrelevant to today's price action. Today's price action is based on the stock market movement of the top 100 US tech stocks. What happened to US tech stocks yesterday and what happens to US tech stocks today? Totally unrelated. So using a moving average for directional bias has got no help whatsoever, has it? Look at the NASDAQ on the daily. Yeah, we've been trending up. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Got 20 positive candles there in 45 days. Yeah, 44 days. So we've got 44 trading days. We're in a bull trend. You should be going long. 22 of those days were down days or neutral. 20 of them were up days. What's that tell you? The market is random with a 50-50 outcome. So what use is a trend line at the open of the stock market? Useless. Doesn't help at all. whether yesterday was a bull candle or a bear candle. Again, somebody asked me to test this with the opening range breakout. If yesterday's candle was a bear candle, go short. If yesterday's bear candle was a bull candle, go long. I tested it, no edge. We've reversed it. If yesterday's candle was a bear candle, go bull. If it was a bull candle, go bear. We tested it. The outcome is always the same. It's random. It's going to go up. It's going to go down. It's going to move through time. You can't predict which one it's going to be. So again, there's no advantage. You can't look at anything on a chart and say, this today is going to do that in this period of time, which is why we position trade and we don't use stops, because you can't predict it. So as we know, there's no point in trying to predict it. So when you stop predicting it, stop using stops, you stop getting stopped out, you start making money. Ta-da! Fixed it. Fixed the market. Just pulling up on the DAX and the Dow back into propulsion. Which time frame works better for the ORB? 5 minute. I've never tested the hourly Refinus. I've never tested the hourly. So if you're going to test, if you're going to trade the hourly, DAX. What's that one? You do that basically. Something like that. Never tested an hourly chart. So, but the whole premise of the opening range breakout strategy is momentum. So it's a momentum strategy. Quite often you'll find that the market will have done its entire move for the day within 1.5 hours. So if you're trading the first hour and you're trying to take a break out of that hour, you've missed all the momentum. It's a momentum breakout strategy. As you can see, it's not very effective. I don't know what this is doing though. It's obviously trailing a stop on candle close. You watch this thing suddenly bank 50 grand or something stupid. I don't think it will. See what I mean? Look, you're missing all the movement. I think probably the trailing stops are too wrong on this. We're still in that long though. Oh no, we're out now. So yeah, 5 minute. Hussein, so much better to trade the Dow, the DAX, the NASDAQ, the S&P, FTSE with risk management, and hopefully some will win, some will lose in a day. But idea is to take all ORBs. Yeah. Afternoon, Tamo. So yeah, if you trade them all, you run the danger with trading them all. If you look at the S&P, right? So look at the price action on the S&P 500. Yeah. Now look at the price action on the NASDAQ. Yeah. Very, very, very similar. So if you trade the S&P and the NASDAQ together, you're doubling your exposure because these two move very, 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 very similarly. A lot of the tech stocks are in the S&P 500 that are related to the NASDAQ stocks. So you've got the way a lot of the tech sector works is when you get a tech stock rally, the suppliers to that tech stock will also rally. So you've got component manufacturers for Tesla, right? If Tesla rallies, these companies that manufacture the components for Tesla will make more money. Therefore, their stock rallies. Their stock will tend to be in the S&P 500. Therefore, the S&P 500 moves with the tech stocks. So when you get this type of movement on the NASDAQ, you're going to get the same movement on the S&P 500. So you don't want to trade both of them. Excuse me. You'll also find a lot of the time the Dow, which has been less prevalent these days than used to, but the Dow will also do the same. Yeah, so there's your move on the Dow. Yeah, so you will get a very similar result. So what I would do, and the FTSE and the DAX are actually quite different. So FTSE, yes, I haven't tested on the FTSE. I don't trade it. DAX, definitely. Dow is the safer one I've found. NASDAQ is the most profitable one, but the most drive you up the wall one because it can be very, very volatile. So in my experience, the Dow, the NASDAQ, and the DAX are the three main ones that you should be trading. That's what the back testing showed anyway. Just be careful of exposure. If you're going to run it on multiple instruments, reduce the risk. And back test, back test it. So run a test. If you do a test on the NASDAQ, yeah. So if you do a test on, I don't know, just do that one, for example, on the DAX. So if you run a test on the DAX over a period of time, see what the results are on that. That's not going to work on the hourly, is it? Because it's a 5-minute time frame. Set far. So if you run the test on the DAX, get your results, see what your results are, and then export those results into a spreadsheet. Yeah, so whatever the results are, just to get those out, just save as a report, or you can copy all and paste them into spreadsheet. Run the same test on the NASDAQ or the or the Dow or whatever you want to. So you've got the same dates, and then merge those spreadsheets together, sort them by date, and see what your drawdown would have been. You'll probably find you'll have days where you'll have big losses because all three strategies would have failed on the same day. And those will be the days where you open up rangy, where there's no movement, there's no volume. So you get killed. If you get killed 3 times, you're going to have 3 times as much pain, aren't you? So just be careful when you're running it on multiple instruments, because you'll have periods where it will work beautifully, and you'll have periods like that. Yeah. So days like this, nothing you can do about it. Yeah, it's just a chop day, a rotation day, as we call it in the futures market. Trend days, you'll kill it. And this is what the whole strategy is. It's a breakout. Don't forget, it's a breakout strategy. Yeah. Breakout and trend strategies have a strike rate of around about 30%. But their risk-reward ratios are 3, 5, 7, 10 plus. Yeah. Mean reversion strategies have a 70% strike rate, roughly. But their risk-reward ratios are 1.5, typically. So high loss rate, high reward. Low loss rate, low reward. Which is why that guy was saying about why not mean revert it? Then you're going to have a 70% strike rate. Doesn't work that way. Wish it did. Would be much easier to develop strategies. There you go. Right, it's 3:30. So Dow is retesting, potentially second leg down. Stuck between 2 propulsion areas at the moment now. So potentially you've got sellers trying to sell down from there. You've got buyers trying to buy up from there. You're stuck in the middle. So it could go either way now on those. Forex is not really moving anywhere. Banked a little bit more on the H1 M5. Pound US dollar. Oh, that was this morning's one, wasn't it? Already done that. So out the pound US dollar. US dollar CAD is about to bank. 46. A little bit more downside. So if we can get an ADR hit on that, that'll bank today as well. 1/3% profit on it. Minute. Okay, so I'm going to leave it there today. Anything else you need, let me know. I'll be back tomorrow morning, same time, 7:50 for the Frankfurt and London session, 2:20 tomorrow afternoon, same time for the New York session, depending obviously whether you're in New York or in London. And I'll be in the Telegram group if you need anything in between. But that's really it for today. So everything mean reversion wise is on. We're in quite a few positions now, but again, no ADRs, no RSIs. So you should be in stuff if you're position trading and using the market reversal alert CA and just waiting for it all to play out. So, Brian, I believe the assumption is all markets move the same, but that is further from the truth. Too much misinfo out there that supports the idea. Yeah, it does. All markets move. They don't all move the same, though. This is why ADR exists and why I have this on my chart, because everything has got a different range. It all moves up and down, and it all has market structure, but the structure is very different depending on the volatility of the instrument. So, you know, you have 3 indices go down. They're not all going to go down at the same rate and in the same way. They will probably all go down, but they'll go down with different spikiness and nastiness. And that's what the opening range breakout, why you can't say, you know, back testing on any strategy is going to work forward testing, because the way that it got to where it got to is going to be different today than it was yesterday. And yesterday you could get the same amount of movement. One day will be down, down, down. The next day will be down, up, down, up, down, up. You still get to, from A to B the same amount of distance, but the way you get there will kill you or make you a fortune. That's the variance, and that is going to be different every day, which is why backtesting is unreliable at best, isn't it? Baggy, been running the EA hedge set file for 3 weeks on the 30-minute, 4% drawdown and banked 9%. Good job. What's your thoughts? You've been running the hedging set file on the 30-minute chart. I've never tested a 30-minute chart, ever. So all I would say is on 30 minutes, depends if you're using the hedging set file with RSI filter or not. If you're using an RSI filter, obviously you're going to get more entries on the 30 than you would on the hour, but you're going to get less entries than you would on the 15, because it's in between the 15 and the 30 in the hour. But don't know. But that's good. 4% drawdown, 9% banked. That's an evaluation pass, isn't it? In 3 weeks. Job done. But yeah, I mean, the H1 hedging set files banked 20% this month, but we've got bigger drawdown on it. But this is trading every instrument, you know, so you wouldn't trade every single instrument. You'd limit your exposure, wouldn't you? So, but that's a good result, really good result. Keep doing what you're doing. And just remember, when you get funded, if you get funded, when you get a decent amount of money in your P&L, stop and pull it out. Make sure you pay yourself before you blow the account, which is where everybody tends to go wrong. Right, I'll leave it there. Anything you need, I'll be in the Telegram group. I'll be back tomorrow, same times as usual. And have a good day, and I will speak to you guys then. Have a good one.